Yeah, good morning, good afternoon, good evening, whatever time you're watching this video. Yeah, is your Ibu Boy Dynamic Exchange again. So this is our first course on the advanced class, which is called, we'll be talking about market structure today. Market structure. We'll be having about 9 courses on the advanced, 9 or 10 courses. Yeah, but let's start. Let's start first. Yeah, we'll be talking about market structure, and you guys have been hearing me using the word break of structure, change of character, demand zone, supply zone, and so on and so forth. So today we'll be talking about market structure, which is the first top course we'll be taking on advanced. So one thing before I start, you guys need to know that when you this advanced class, you don't need to feel as if it is difficult. I'm ready to break it to the lowest I'm telling you, to the lowest term for you guys to understand, so you guys you don't have to worry. You don't need to panic. Just follow the trend. But I love advanced class. This advanced is where you enjoy me the most. You enjoy me the most in this advanced class because I love it. It's talking about strategy. When the strategies are met, you understand. I don't like our videos to be much, so let's start. So today we'll be talking about we'll first start with the sketch before we now move to the main market and analyze it. So this first video I'll be making is about sketch video, about how market structure work in an uptrend, which is also called a bullish market, and how market structure work in a downtrend, which is also called a bearish market. Now, for instance, if we're having an uptrend, let's talk about a sketch. We're having a higher high, having another higher low, having another higher high, also having another higher low, higher high, also have another higher low, and we have another higher high. Let's just stop there. Now, why am I tagging this my higher high and higher low? This is higher low, is higher high, because this one is this is where the market was at that moment, and it went above it and it came down higher low. They being this market came down and it went below this. I mean, they being this candlestick. I know it's not a candlestick, but it's like a sketch. Let's start with this first before we now move to the main market. They being this candlestick came down and went below this, then this one will turn to our lower low. Are you getting my point? I will explain this very well. Don't feel as if it's very difficult. It's very simple. So because this one is called our higher high. It's called our higher because it keep getting, like, I don't know, it's getting above the previous one. It is bigger than the previous one. You see, this one too is the next higher high, and this one too is the next higher high. If it creates another candle that is above again, that one will be the next higher high, and the one beneath will also be called our higher low. We call that what? Higher low. That's how to determine your higher high and higher low. I'll go back again. This is our higher low, higher high, higher low, higher low, higher high, higher low, higher high. It's as simple as that. I will ask you to and you guys need to know that after finishing one course in advance, you'll be sitting for exam. It's not like basic that I have to teach you everything. No, after you are done with this course, you will start another one again. You will do the exam, so to say exam before we move to the next course. So this one I'm not ready. This one is time for seriousness, because this is where we are talking about the main business, smart money concept. Okay. Now we want to talk about this place that is now called this range that is in between the higher highs is called what we call break of structure, which is always tagged like this. Now let me identify my break of structure. I'm coming. Sorry, please. Sorry. I have to delete that. Okay, let me identify my break of structure. That's my trend line. Okay, let me identify it from here to here. From here to here, will be my BOS, break of structure. You can see BOS is also a short pronunciation for break of structure. So I will be tagging every space there as my break of structure. That's what we call break of structure. You have been hearing that from me. Sorry. BOS, break of structure. Okay, the next one. Of structure, BOS. Okay, for people that actually will be worried that how am I doing my break of structure, that how am I getting to, you just come to this you just look for this text or you know your trend line, sorry to say, when you click on your trend line, when you just click on it, and click, maybe you can just, for instance, just draw one trend line and now double click on your trend line, double click on it, go to the text section. You can see where this text section, and you can save your BOS on your trading view. No need that when you want to analyze the market you have to be writing it. No, you can just type BOS here. When you type BOS, you just come over here just for you to save that place. Click on it. You see I had some saved already. I already have my own BOS saved already, so you just click on that save as and you save it. When you click on save as, it will ask you, you just type BOS here. So when next you want to do it, you just click on OK, and so, because I have a BOS already, so that's how you always have your BOS. You can see that I don't just have to be typing my BOS. I have it saved on my trading view. You can do that also. So as I've told you, let me go back again. I'm taking my time to explain to you guys. Higher lows, higher high, higher lows, higher highs, higher lows, higher high, higher lows, higher high. Higher high occurs in an uptrend market. I need you guys to know that it occurs in a uptrend market. Higher highs and higher lows occurs in a uptrend market. It comes this way, this way, this way, this way, this way. Keep going like that, and so on and so forth. So without wasting much of our time, let us assume that this candlestick that we have here, this sketch we have here, is on a uptrend. I said uptrend. So let's assume that is on a 4 hours time frame. Let's assume it's on a 4 hours time frame. Now I used to tell you that you always analyze on 4 hours, 1 day time frame, or 1 hour time frame, and you go to the low time frame, 5 minutes and 15 minutes to what? Make your entry. Analyze on higher time frame and go to lower time frame for your entry. Understand? That's the best way to enjoy SMCO or the smart money concept. So let's assume that this is on a 4 hours. This chart, like this candlestick, is on only 4 hours. So like 4 hours. Are you getting my point? So when you are if you are on a 4 hours time frame here like this, it will be on a lower time frame. It will be showing as if you are, when it gets to this place now, for instance, it will do as if it's coming down. It's a lie. It will later assemble, like it will later align, so to say, it will align to the 4 hours time frame. So for instance, now in a lower time frame, this is what when you are seeing higher highs, higher lows, higher lows in a uptrend market like this, you have gotten your 4, maybe this is your 4 hours time frame. You just come over here. And when you have analyzed the market, BOS, break of structure, everything, you have seen that the market is on uptrend in a 4 hours time frame. You just come over to the recent candle. Are you getting my point? To the recent candle. Yeah. So on a lower time frame, when you are at this place, on lower time frame, it will be showing you something like as if it's coming down, as if it's coming down. It will do as if it's coming down. On a lower time frame. But you cannot just enter like that. Sorry, please. You cannot just enter like that. You have to wait for something called change of character, which I will be teaching you. Yes, which I will be teaching you in change of character is still in this market structure, where I'll be teaching you your change of character. But all those things I'll be teaching you when we get to the real life, like the live candlestick, when I'll be doing after this video. I just want to use this one to explain the meaning of break of structure and higher highs and higher lows. So I'm moving to it now. This is the uptrend, like as we have already explained. Now this is the uptrend market. Sorry, please. Hope this thing has not cancelled. Yes, it has not cancelled. Okay, yes, this is an uptrend market. I have taught you break of structure, higher highs and higher lows. So I'll be teaching you change of character in a live market. When I'm done with this now, in the next video I'll be doing is going to be a live market, how to implement this break of structures and higher highs and higher, how to figure it in the real market. So we're done with the higher uptrend. Now let's move on to the downtrend. I'm coming. Let me delete this. Let's move to the downtrend. Now, in a downtrend market, I might be having something like this: lower high, lower low, lower high. I'm coming. Lower low, It's too much. Lower high. I'm telling you, this is just a sketch. So when we get to the real market, you understand. I just need to do this sketch so that you can understand. So in this downtrend, you are having our lower high. I told you, lower low. Sorry to say, lower high, lower low, lower high, lower low, lower high. I'm just doing a sketch. It's also explain. So you know that the difference is what we are going to be having in this video here. I don't want to waste much time in this video. I hope you understand. This difference graph here is called what? The break of what? Structure. So I'm going to implement this in our real chart now. I just use this to explain normal, just for us to, I just use it for normal, like the normal introduction. I'm making the live chart now for you guys, which I'll be dropping instant. So this is just the introduction. So making the live chart now. I hope you guys understand what we mean by break of structure and lower highs, lower low, lower low, lower high happens in what? Downtrend. Higher high, higher low happens in what? Uptrend. So thanks for watching.